Hello and welcome. My name is Jeffrey Kennedy and welcome back to another episode of Elliott Wave Junctures. Earlier in the week, and I believe it was actually Monday, we looked at a number of key characteristics of counter-trend price action. And there are primarily at least three that I look for. Number one, the price move has to be a slow-moving price move, okay? Counter-trend price action, corrective wave patterns, they tend to take a long period of time to unfold. That's number one. Number two, wave C and A, the relationships we tend to see are equality up to about, say, 1.382. That's number two. Number three, the price move tends to be contained by parallel lines. Okay, so what we're going to do today is actually apply those ideas to the energy complex. We're going to look at a few issues with respect to, say, crude oil, the XLE, and even some individual energy stocks, and essentially apply this idea. Okay, now with respect to crude oil, this is the weekly continuation price chart. Let me just fix one thing on my computer real quick. There we go. Really quickly. Okay, there we go. What we have here is a big move to the downside. That's an impulsive move. Prices travel far in a very short period of time. Subsequent price action from that December 2008 low of, I believe it was about $32.40 a barrel, what we've seen since then is a very time-consuming move to the upside. So number one, this is a slow-moving price structure or affair. Number two, it's also contained within parallel lines, and as you can see right up here at 113.84, essentially where price is topped, that's where wave C equals the distance traveled in wave A. And I apologize about the misspelling here in wave C, but in other words, the three key things that we tend to look for are very present in the price chart, the weekly continuation price chart of crude oil. Essentially what this implies is that this is a counter-trend move, it is complete, it is a bear market rally, and it's going to be more than fully retraced in the months ahead. Simple analysis. Now, if that's indeed the case basis crude oil, then we should be seeing similar type of structures or wave patterns in other markets. Now, before I continue on to other markets, I would also like to point out there's a nice head and shoulders pattern in the crude oil market as well, and we're currently sitting on that neckline. If we can take out that neckline and do so decisively, your neckline measurement really projects down to about, say, $38 a barrel. Just an FYI on that. But let's go ahead and take a look at the next price chart. And the next price chart, of course, is going to be the XLE. This is the Energy Spider ETF. And again, what you'll tend to see is exactly what we spoke about earlier in the week. This is a slow-moving price move. The structure to the advance to the upside from the 2009 low, very, very time-consuming. Essentially 1, 2, almost 3 years where the prior move to the downside essentially unfolded in a matter of months, where we went from 90 to below 40 in a matter of months, where on the opposite side it took us a number of years to only partially retrace the move. This is a slow-moving price structure. It is contained within parallel lines, and right here at 82.96, that's where wave C equals the distance traveled in wave A. Okay, here's ConocoPhillips, ticker symbol COP. Again, slow-moving price affair, slow-moving structure to the upside. It is indeed contained within parallel lines, and at 84.56, that's where wave C equals a 1.382 multiple of wave A. Again, the three key characteristics that we spoke about in Monday's trading, we're now applying to the energy complex, and we're seeing a number of different opportunities, and certainly at least a forecast that we can actually begin to piece and put together with respect to the months ahead, and that tends to be a bearish forecast. Here's the British Petroleum price chart. Now, the reason I'm throwing this in because I thought this was a nice structure with respect to a running triangle. Running triangles can only occur by themselves in the wave 4, wave B, or wave X wave positions. With respect to this price chart, this price move here over the last, say, 3 years has been very sideways, and also, too, notice it is contained within parallel lines. I believe this is a contracting triangle, wave B, and does indeed fit the outlook with respect to, say, ConocoPhillips, the XLE, as well as crude oil. But there's definitely going to be some pressure on this complex as we move into, say, 2013. Here's the final price chart for the evening. This is Occidental Petroleum. Ticker symbol is OXY. And again, the structure, I think, is very complete and very, very simple to actually interpret. From the 2008 low, we have waves 1, 2, 3, 4, and 5. Nice impulsive move to the downside. The subsequent advance into this year's high, this advance right here, that's a three-wave structure. Well, as you know, a three-wave move is a counter-trend move. That's a corrective wave pattern. Thus, we can expect prices to be more than fully retraced, or that advance to be more than fully retraced. So again, as we move into late 2012, early 2013, I'll be looking for this sell-off that we've seen from this year's high in Occidental Petroleum to actually continue back to below the extreme we saw in 2011, and most likely back to below, say, $60 a share. So in other words, that bearish forecast that we put together basis the crude oil price chart seems to be evident and applicable with respect to the subcategories of the energy complex, say, again, energy companies as well as the XLE ETF as well. Again, there are three key characteristics of counter-trend price action that I always look for. It needs to be a slow-moving price affair. It needs to be contained within parallel lines. And wave C and wave A tend toward, say, equality, i.e. 1.0 or a 1.382 multiple. Those are one of the things that I look for, and the reason why is because more often than not, they spell opportunity from a trading perspective. Now, again, with the price charts that I've shown today, each one of these price charts is a weekly price chart. My forecast here is very, very long term as we move into 2013. If you want to stay on top of each of the waves within the structure as we move into the months ahead, highly recommend the Specialty Services Energy product edited by Steve Craig, good friend and a brilliant analyst, and also our resident energy expert. So please check out his product. Again, Steve Craig is the editor, and the Specialty Service Energy product is the product you'll want to keep an eye on. Thank you very much, and have